Yeah, go ahead.
I think we got the same thoughts. If only Warren Buffett had this kind of indicator,
Yeah, why,
whoa, he would be the richest person in the whole universe, man.
Hello guys, welcome back to the channel. Today we're going to do something very different, something we usually don't do. We are going to be reacting to
TikTok videos about stock market or stock investing.
Yeah, maybe we'll look at some personal finance ones as well.
Yep. Okay, so this is gonna be the very first video that we're gonna be reacting to. It is Invest Diva Kiana, where she'll be talking about her top 5 best performing stocks in her $2.4 million of portfolio.
My top 5 best performing stocks in my TD Ameritrade account, which is now worth $2.4 million. Not just percentage gains, but actually dollar gains, because allocation also matters. So I've sorted my portfolio based on dollar gain, as you can see here. And to be completely transparent, I have 208 positions in this account. So number 5 is AMD at 49% gain, $21,000. Number 4 is Microsoft, $25,000. Number 3 is Google, $25,000. Number 2 is Tesla, $47,000. And with that, number 1 is NVIDIA, 268% gain.
So,
Well,
MJ, what are your thoughts, man, about
208 stock. So look, no one knows how the 2.5 million came about. Certainly, it is great that she is investing in 2.5. She has already invested, right? 2.5 million US dollars worth of stock, and that's fantastic. However, I think it's very important, and it's not her. I'm not saying that she's doing this on purpose, but for those who are viewing, it's important to know how someone got the 2.5 million. Is it a result of investing in stocks and then getting the amount? Or is it that they've probably made money somewhere else and then now they are actually investing a lot of that money into these stocks? Now, my personal view is, and again, this is speculation. No, not speculation, rather. This is usually most of the case. We have students as that we train as well. And basically, with 208 stocks, it's actually pretty hard to make good gains.
Yeah, definitely.
It's actually quite difficult because, let's say, even if you pick, Apple, right? Even if it goes up 10 times, but you only put in, let's say, 1% of your portfolio into Apple. So that 1% grows to 10%.
Yeah.
So really, I have a few questions about the video, but yeah, those are my thoughts. What are yours?
Yep, definitely. If you look at their gains, right, 0.64% on her portfolio, she's making about 15,000 USD.
Yeah, that's right.
Yeah, but the reason why she's making but if you hear the amount, it sounds a lot, but when you compare to this actual portfolio money that she actually put inside, it's about 2.4 million. So you see the comparison between these two, right? It's like pretty far-fetched, but that's the power of saving, of compounding. Yeah. So yeah, make sure you always save so that once you reach to a level, the return on investment of your asset will not really, I would say that
you don't have to rely too much on your returns, right?
Yeah, correct. Yeah. Okay, next we're gonna be reacting to Brian Aarons, where he's gonna be talking about how to make your first 100K in a year.
Your first 100K in a year. Share with someone struggling financially. All you need is 10K to start. Cut hair, wait tables, be valet. Do whatever it takes to make that 10K. Then open a stock account and learn how to analyze stock charts. You'll be trading safe stocks like Apple and Tesla to make just 2% on your money each day. After just 5 days of trading 10K for 2% profits, you'll make over a G. And this stuff compounds. That means after 150 days of making 2% on your money, you'll have your first 100K. School won't teach you this, but I will. Follow for more.
Okay. Well, I think he said that you need to save 10,000. Look, if you can make 2% a day, why save 10,000? Start with 1,000.
Yeah.
Right.
With 1,000, 2% you make about 20 bucks, right? Yeah, 20.
Yeah. Why not just start with 1,000, right?
Yeah.
But yeah, I mean,
I think the way he phrased it is like, if you are gonna be making 2% on a daily basis. So you're trying to telling us that the stock market is always for some reason it still is going on a linear uptrend.
Here's the thing. Here are some stats that I think I shared on Instagram about a year ago. The probability of you making more than 2% in the stock market, S&P 500 specifically, is something like 50%. So half.
Yeah.
Which means, right, the idea that you make 2% daily is really wrong. So whatever his calculation is, you need to double it.
Yep.
But this is based purely on math. As you watching, as Jonathan yourself, so you know how much emotions play into it.
100%, man.
And because like I gave the stat just now, right? There's a 50-50 chance you make more than 2%. But here's the thing, right? In those days, in that 300 over days that it takes you to go from 10,000 to 100,000, right? There are going to be many instances where you put in that 10,000 and it drops 17%. Literally, it can happen, no problem. So when it drops 17%, do you think like rationally you're going to be like, it's fine, I just have to do it like 300 times more, that?
I'll be just clicking on the sell button, man.
Yeah,
Run, man.
you'll be so much more emotional. It's really not that easy lah. And then another thing is to even do 2% a day. That is assuming, right, that all the stocks in your portfolio collectively go up 2% a day.
Yep.
Right. So all you can do, the other thing, which is probably not the smartest thing to do, is to put all their money into actually one stock. Right. Like say Apple and Tesla. I mean, one Elon tweet, man.
Yes, sir. We need Elon to pump the stock up. That's the only way to make money, man.
So do you have any other thoughts?
Nothing much, man. I mean, the way that he phrased it, in 150 days, which is literally about 5 months, you can 10x your money. That sounds like a get-rich-quick kind of strategy, man, which I don't know whether it's going to work or not. But to me, I'm not buying it. Yeah, because I've seen it and experienced it firsthand. So
it is theoretically possible, but it looks like more of a get rich quick. Get poor quick.
Yeah, correct.
So, yeah,
that's the word. Okay, guys, if you love to watch this sort of video, make sure to tell us in the comment section down below. Also, make sure you hit the like and subscribe button, and don't forget to hit the notification bell so that you will know when new videos are out.
Okay, so this next video is by Connor VO. He's going to tell me, 3 steps to find stocks that are going to rocket. Ooh.
Okay.
Nice. Very nice.
Very straightforward kind of research.
Okay, look. So, first I would say it makes somewhat logical sense, right? Like if insiders are buying, you should buy too.
Yep.
There are only 2 things you need to take note of when an insider is buying. The first is how much is he buying?
Yeah.
So if he's worth millions, but he only bought like 10,000 ringgit or 20,000 ringgit of shares, what really is the difference, right? Number 2 is just because someone in the inside is buying doesn't mean that it's right, because it could be he's doing it just to support the price. So take for example, I remember Top Glove, right, when it was crashing. Tan Sri was buying, right? I don't know why he's buying. Could it be that he's trying to give confidence to the market, or could it be that he really thinks it's cheap? I don't know.
Actually, in the press, he did mention that he thinks that the company is undervalued.
Okay, so you see, obviously, it hasn't been good for Top Glove shareholders since then, right? And there's no look, profiting from the stock market is definitely not it's 3 steps. Yeah. And if there was 3 steps, it's not that simple.
Yeah, it's definitely more into just looking at insiders trading. You still have to look at whether the business is still performing as well as its previous, and also look at the financials. And definitely not only just to look at those transactions. It's only just a tiny bit of information that we are getting from it only.
Okay, this is by hedge fund manager.
Manager.
Okay, all right, let's hear.
Cheat code for stocks. As you can see here, it spits out buy and sell signals. So zooming out and going back further in time, it seems to be pretty accurate. So pretty much how it works is it gives you a line of support, and if the stock's price breaks below that line of support, as you can see here, then a sell signal occurs. And if the stock's price breaks above the sell signal line, then a buy signal occurs. So if you want to access this indicator yourself, just go to tradingview.com. Next, click Indicators and Strategies. You're going to want to click on Public Library and then scroll down until you see Super Trend by Kevon. And there you have it. Thanks everybody. Like and follow for more investing tips and tricks.
Go ahead.
I think we got the same thoughts. If only Warren Buffett had this kind of indicator,
Yeah, why
whoa, he would be the richest person in the whole universe, man.
Look, here's the thing. Let's say for a moment it's absolutely true, right?
Yeah.
That the indicator is there. The problem is that this video has been liked, and probably viewed by few hundred thousand people. So everybody knows this cheat code already.
Yeah, so that means that of the, how many engagements is there? Like 15,000 people? So it
Yeah.
mean that 15,000 will become wealthy, guys.
Yeah. Like
This actually solve the inequality. Income inequality.
I mean, it's not happening, guys. That's it. That's all I was saying.
Yeah. Okay, so for our last video, we're going to be reacting to Mark Tilbury, where he's going to share with us what we should do as a beginner to the stock market. Okay.
What would I do if I was a complete beginner to the stock market? Well, I would do these three things. First, I'd read this book all about investing. Second, I'd build an emergency fund, which is 3 to 5 months of my living expenses. Third, I wouldn't invest in individual stocks like Tesla. Instead, I'd put all my money into index funds like the S&P 500 and hold it long term because no research is required and it doesn't drain my time.
I think it raises some good points about time.
Yep.
So I think if you don't have any time at all, putting your money into
index
funds is actually not a bad idea.
Yep.
But again, you have to remember that the index funds move in cycles.
Yeah.
Right. You have actually, for those who don't know, you have 17-year cycles for the stock market usually, where for 17 years you don't make money, then for the next 17 years you actually make a lot of money. So if you are going to apply this sort of strategy, the expectations are important, because it could be a case where you start investing and then the stock market drops by 30-40%. It could really happen, right? It's not out of the question.
Yep.
And once that happens, you have to keep at it, right? He gave the book by John C. Bogle, right?
Yeah.
The key thing is to actually be consistent about it. And I think a lot of people are not. That's why they do not ride the rewards of the stock market. So if you have to do this, that's what you would do. That said, I wouldn't say don't invest in individual stocks. I do think that if you are predominantly an indexer,
Index fund.
you should still consider putting some money into
Individual stocks.
because one, obviously the potential for going up is a lot better. Tesla has done better than most index
It's gone
funds.
up more than 10x, I think.
Yeah,
You look at
in
1 year
a
spent
year,
in
right?
a year. Yeah.
Right. So that's something. But that aside, I think it's also important in terms of learning, right? I think when you buy individual stocks, you actually learn a lot more about the stock market. But that's just my view. What's yours?
Oh, mine is also, I totally agree what you just said. I think I'm kind of aligned with Mark on his first few tip, which is one is to read the book. That one, I think it will definitely help you, and basically it helps you to grow your knowledge about how to begin investing. And the second tip that he gave is to set aside a few funds into emergency fund.
Yeah, that's
I
a good
think,
one.
Yeah, I think not many investors actually, to be honest, even including myself also, I don't really set emergency fund. Yeah, so basically I just invest in everything that I have.
Your stocks is your emergency fund.
Yeah, my stocks is my emergency fund. But the thing is that I'm not going to take out any money from that fund. It's just going to be staying there for like 20 years.
Unless
30
like
years.
you absolutely need it.
Yeah, correct. Okay, guys, that's about it. I hope you guys enjoyed this video so far. If you're liking it, make sure to tell us at the comment section down below. Also, don't forget to follow us on our social media, Facebook, Instagram, Telegram, and also we have a Discord channel. So do check it out. Link at the description and comments.